Hi, and welcome to Sunday Night Charts. We take a look at the charts to help you with the trading week ahead. I'm your host, Steve Van Meter. Let's get right into this. Moving averages, these are the colors on your screen. 50 days green, 100 days blue, 200 days tan. Price versus momentum. Price is general direction, prices are ahead. Momentum is a rate of change, a bullish indicator for both is positive, and bearish indicator for both is negative. Momentum often but not always leads price. Technical analysis attempts to determine where buyers and sellers are at. Resistance is level buyers can't break. Support is the level sellers can't break, or resistance is where the sellers are at. Support is where the buyers are at. Technical analysis does not predict prices. It can be used to determine the risk of trade, help with time and trade, and provide direction to the path of least resistance. Charting offers possibilities, not probabilities, and not certainties. Let's start out with the S&P 500. Now, no surprise, we would see annual momentum flip here bullish on the ultra short term, simply because of kind of the thrust off the 50-day moving average. Let's take a look at that. Otherwise, no changes for SPY. And what do we have? But this is interesting. Now, one thing you're looking at in terms of momentum and in terms of strength of a trend is it bounces off a 50-day moving average. So it starts with a cross and then repeated confirmation. And so you'll notice, and we talked about this last couple of weeks, that the strength of these bounces were getting weaker and weaker. And I want you to think of this like, bouncing a ball or skipping a rock across the lake. The more skips, the less momentum it has. And then all of a sudden, as if there was a panic buy mode, we see 390 being now major resistance for the SPY, and just shot off of there as if people were ready to go. And because there's no volume above here, there's no overhead resistance. Now, it doesn't mean it can go to infinity. No, it just means there's no real overhead resistance to where sellers are at. And that's what, of course, technical analysis tries to determine, is where sellers are at. We certainly know where support is at, where buyers are at. They've made it clear they're not afraid to buy at all-time highs and take prices higher. How about the NASDAQ 100? A couple of flips here. It's ultra short term, flipped on annual momentum to bullish. Intermediate term on price went to bullish. Let's take a look at the Qs and see what we've got here. Now, remember, it was stuck under its 50-day moving average, kind of oscillating between that and its 100-day. And you kind of wonder, was it going to break down? Nope, it caught on fire just like the SPY, is now sitting right near its all-time highs. A major now level of support will move this up a little bit. It's just right in here in this cluster of trading. There's a bit of volume up here. Still nothing significant. Nothing really holding the Qs back either. It'll be interesting to see going into the futures opening here what's going on. How about the Russell 2000? Once unstoppable, now still got a short term on price and annual momentum, whereas the ultra short term flipped. Of course, we're going to expect IWM to have launched up as well, and it didn't. So small caps often lead the large caps. So let's add some lines here, and we can duplicate this, and now we see resistance is right up here. So if you're doing your own charts, you're going to look at where the volume is at, look at where price is stalling out, and remember, the small caps lead the large caps, and this is not a strong sign in terms of what we just saw on SPY and QQQ. So right now we can tell the small caps are range bound. They're stuck between a resistance up here and support down here at, say, what is that, 211, and overhead resistance at 226. So if this turns out to be a topping pattern for small caps, that is an ominous sign for the large caps, which are moving higher. So if you're bullish on the U.S. equity market, you want to see those small caps get some strength there quick. How about the energy sector? Also, just once out of control, now we're starting to see some indicators that this is slowing down. Now, this is what I'm looking at for a trend change. On the ultra short term is went bearish, and now the short term, we're seeing both bearish there. It takes a little bit longer for the intermediate term to flip. When I see that, now I'm really kind of interested. So let's take a look at XLE and see what's going on there. And sure enough, it did not get up where I thought. I thought it was going to tag up here at 55.50. It didn't. It's come back down. It's trying to tag its 50-day moving average. Now the question is what is the strength of this move? You see, the last time it hit its 50-day moving average, is someone lit a fire under this and took off. Now the question is, does it have momentum? Does it have some strength here? It's running into some volume here where sellers are at. Does it have some strength? Let's take a look at crude while we're here, and you can see crude under its 50-day moving average finding heavy resistance right at the $62 price range. And there's a cluster of selling right in here. You see the volume, you see price. Every time it gets up, it gets sold back down, up and sold back down. So that is telling you that whatever's going on in the crude market, well, isn't overly bullish because it hasn't been able to break the 62 barrier consistently, other than, this week and a half here that it was over. Still have potential topping pattern, left shoulder, head, potential right shoulder, neckline here. Major support for crude is at 52. Resistance clearly at 62 on crude. How about the financial stocks? Now remember, financial stocks are going to tend to go up when interest rates go higher. Why? Because the belief is that banks are going to be able to be more profitable. Of course, it doesn't make a lot of sense if you watched the macro show on Friday, where we talked about how lending is contracting even further. Ultra short term flip bullish. Let's take a look at the financial stocks. As again, the market is just hoping consumers rush out and borrow like crazy, sitting right at its all-time highs. Major level of support is sitting here between 31 and 31.50. Let's put another line up here because clearly this thing is fighting, kind of this top end of overhead resistance. So we'll be able to hold this. Will it be rejected? It still needs to come back and probably visit its 50-day moving average at some point. But the question is, can bank stocks continue this move higher? That is a big question. And the trend is the friend, and the trend is up. How about utilities? But again, it's going to come back to borrowing. We got 700,000 people a week filing unemployment claims and lending contracting. It certainly doesn't bode well for higher interest rates. Utility sector, annual momentum flipped bullish on the ultra short term, intermediate term flipped bullish on price. Let's take a look at what's going on with XLU right below XLF. And there it is. It broke through resistance, and now it's looking like it's got its sights set a little bit higher. But where is the new level of resistance? Well, we're going to draw that line in right now, and it is right where it's sitting at here. And you can see that resistance line. It's tagged up in here before. This little topping pattern is just what that is. It is a little topping pattern, and it's rejected. You can see price gets up there and gets rejected. Here it is, getting rejected. So broke through major level of resistance, immediately found a new level of resistance. Generally, what happens is when you run into resistance, you come back and reconfirm support. Lots of volume there where buyers were at. Amazing that people didn't want utilities, and then, well, I guess they had change in heart. All right, let's go on to the industrial sector. Not much of a change here, a little change in annual momentum. Not worth looking at charts since it's kind of mirroring the equity indices. How about gold miners? All of a sudden, price has gone bullish between short-term and intermediate term. And these are indicators that I like to see. 3, 6, 9 month are now negative but rising. The question is this really a change in trend for gold miners? Is this finally what everyone's been talking about, that, hey, you should have been buying down here because this is a big change? Or is this just what we've seen before, where it finally breaks through its 50-day moving average, people start getting excited, and then it kind of runs into resistance at its 100-day moving average? Still lots of trading volume up here. GDX could easily get up into the 35 range and still find sellers there. I just have a feeling, though, looking at what based on what we're seeing, is this 100-day moving average is going to be another form of resistance. Still looking for, in terms of my macro thesis, a breakdown of 31, but it's got some work there because buyers certainly said, no, we're ready to go. You've got a series of higher highs. That's constructive, but the 100-day moving average has been a sore thumb for GDX. We'll take a look at gold here shortly and see if we can get a better picture. How about emerging markets? Looked like it was going to start to sell off, and now it turned around. Ultra short terms, ultra short and short are bearish, bullish on price, bullish on annual momentum on the ultra short term. Let's take a look at the EEM. And we still have this little topping pattern, left shoulder ahead, right shoulder, maybe second right shoulder, still underneath its 50-day moving average, maybe trying to find support on its 100-day moving average. A lot of sellers still up in here right at, looks like a little over 54. If this rolls over and heads down, well, that's the question of the dollar. We did talk about the dollar in the inaugural issue of Momentum Timer Pro. We'll look at the dollar here again shortly. How about treasuries? Are these actually fighting for a return, or is this kind of, well, ultra short term back bearish? Is that a bad sign? Not necessarily, because what we're seeing here is a 1, 3, 6 month are still negative and rising. Now the 9 and 12 month flip red. Now you remember last week I said when the 12 month flips gold, that is a positive sign, but it's a fight. What will happen when you get a bottom in momentum, especially on the longer term, the 9 and 12 month? They'll signal a buy signal, which would be this turning gold, and then it'll run that for a little while, and then it'll flip back red, and then it'll run it, then it'll flip again, and it'll flip a couple times before it gets out into smooth water. So this is not necessarily a bad sign, because price action, well, is suggesting there is a bottom there. So here's TLT fighting some heavy volume, but here you have a series of higher highs. So could this be leading GDX? Remember, we've talked about how TLT and GDX are together, except when financial things go wrong. So the question is, are they going to pair back up and head higher? Or is GDX going to fake out while TLT heads higher? What are we looking for TLT? Well, really like to see it get up to 140. It's got a downward trending 50-day moving average to contend with, but between 140 and 152, there's virtually no trading volume because of all that overnight selling. So this keeps finding higher. The Fed keeps buying. Not buying gold miners, they're buying bonds, so do keep that in mind. The question is, will TLT and gold, GDX, sync up, or will GDX fake out and turn lower? High yield bonds back bullish across the board on price, annual momentum unchanged. Even the 3-month momentum has gone from red to gold. So positive signs in the high yield market as people excitingly pay super low yields for junk, because that is what high yield bonds are. They're junk bonds, because that's what defaults first and doesn't become junk. So here you can see right now, it's sitting right this heavy zone. There have been sellers very clearly in this $87 to almost $88 price range. All of this has been selling up here, but it came down. Buyers stepped in, wanted this. Watch out, still a lot of sellers here. That's all you can say is sellers are in this $87 price range. And if they're still there, well, these buyers are getting faked out. Remember, high yield bonds do tend to lead the broad equity market. If they're not moving higher, then what you see in the equity market is not to last. All right, next up, gold futures price flipped bullish on ultra short term and short term. 3, 6, 9 month are in the gold zone. That means they are negative and rising. That is a positive sign for gold. Let's take a look at where gold is at here, and it's run right into resistance at this, let's see, 1750, been a source of resistance before, have a downward trending 50-day moving average. This is still why I can't get too excited about the gold miners. I know miners lead the metal, but there's been too much selling right in here at 1750. There is a bit of heavy support. Of course, that's all we know that's been selling. Buyers push through that after tagging the support down here is 1687. A break of 1687 says this topping pattern is validated and the show is over. If you're really bullish on the miners, you really need to be bullish on the metal, getting out of the 1750 range through the 50-day moving average and up to 1800. But it's got a lot of work cut out for it, a ton of work. How about silver? Silver's picture looks a lot better. 3-month is negative and rising. 6 and 9 month clean green signals. Ultra short term has flipped. What is going on with silver? Well, let's take a look. And what do we see? Heavy resistance at 20, or heavy support at 24. And we talked about this. There's been a lot of support for silver at 24, and there's been a lot of sellers up here at the $27 range. So 24 is where buyers, 27 is where sellers. The question is, sellers have been moving down a little bit. Are they going to push this and roll this over? We do know there's computer models selling in here. That has been something that the buyers haven't been able to push through. 24 remains still the key level to hold if you're bullish on silver. All right, last but not least, we have the dollar. And again, we did cover this in the Momentum Timer Pro inaugural issue. If you missed that, head to my website at stephenvanmeter.com and check that out. There'll be more on the dollar coming hopefully next week. So what do we have in dollar? Ultra short term, flip bearish, intermediate term. On annual momentum, bearish. Long-term price, I'm not worried about long-term. This is the last thing to switch. 3-month is 1 and 3, green and clean. And 6-month is red, negative and falling. 9-month is negative and rising. And some of these, I really would like to see this back being gold soon. But 9 and 12 month, they'll flip back and forth before they work this out. There's still a lot of positives, though, from a chart perspective on the dollar. Let's take a look at DXY here. Holding support pretty well at 92.13. Hasn't been able to, he's getting pushed below that, but it manages to hold it. You've got the 50-day green crossing the 100-day in blue, which is starting to flatten out. So what I expect here is the dollar to potentially move sideways from where it's at, holding its support, maybe running back up to 93 and bouncing between that, or it's going to come down and hit this 50-day. But it's been holding 92 pretty strong here. We'll see if the sellers can dominate this. They need this to push equity prices higher. They need to drive this lower. But a rising 50-day, boy, remember, rallies start with a cross of 50-day and a reconfirmation. And this is, if this thing, it just goes sideways from here between, say, 93-ish or 90, where it peaked here at 93.34 and just goes sideways and waits for its 50-day to confirm, that is a super bullish signal for the dollar. Anyways, thanks for watching. We'll see you on Monday for the macro show. The content of this video is provides educational information, only is not intended to provide investment or other advice. It is not to be construed as a recommendation or solicitation by or security, financial instrument, or participate in particular trading strategies. Video was prepared by Steve Van Metre. Personal capacity opinions expressed in this video that do not affect the view of Atlas Financial Advising or Steve Van Metre Financial.